The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Friday, USDA's big data dump, the January WASDE report, quarterly grain stocks, winter wheat and canola seedings. There was a lot of data to take in. Corded soybean markets especially liked a lot of the numbers they saw. Plenty of surprises. Let's talk about it and get some price perspective after the reports. Corey Bratlin with agmarket.net joins us here on the show. Corey, good to catch up with you. I know Friday, a busy day for folks in the trade and in the ag industry. And man, I'll throw it to you and say, we got surprises. We typically get surprises with the January data dump. I think top line, at least for me, was the cuts to corded soybean yields for 2024.
Yes, Jesse, that is exactly the numbers that caught everybody by surprise. We did see, not a big surprise that we saw the lower yield. Okay, typically big crops get bigger, small crops get smaller. We saw that. We saw USDA back in, I think it was October, make a pretty significant change in the yield on corn and soybeans. Then they follow through that with 3.8 bushel an acre corn yield decrease and give us a 1 full bushel decrease on the soybean yield. So net, that gives us production numbers, sub 15 billion bushels on corn and soybean production number 4.366 billion bushels. So well off of what we had talked about here just a couple months ago and what we were even talking about later this fall. So significantly lower numbers here on the production side.
Well, thinking about those numbers, there was other surprises too. And we look at things like the quarterly grain stocks, the projected ending stocks as a whole as well. I mean, you look through some of those numbers, a few of those maybe getting a little snug now with some of these changes, Corey.
Yeah, when you talk about the quarterly grain stocks, corn come in here with a slight reduction, 130 some million bushels, I believe it was, on the overall numbers here. But the soybean number, that soybean endings or the soybean stocks come in at the second lowest number that we've seen in the last 35 plus years. So that's one of the bigger changes that we saw. The largest decrease we saw was just a couple years ago, back in 2022, actually. So for stocks to come in, lower production, we didn't see any yield or demand change on soybeans. We did see a slight reduction in demand on the corn. We saw exports get ratcheted down about 25 million bushels, and feed and residual, basically, I'm guessing it's the feed number, come down about 50 million. So I think that's USDA maybe being a little proactive. With these higher prices now, we're going to stay supported. We run up to the next level. We got March futures up in this 470, 472 level before backing off. That's going to keep, overall, I think, going to lower our demand. Plus, this dollar index up another 50, 60 points again today at, 109.4. It's like, we're just not real competitive out there. But when you look at the global ending stocks, Jesse, we are at the tightest global ending stocks we've seen since 2014. So I think that's maybe why the funds have got such a long corn position right now, because the lion's share of those stocks are sitting here in the U.S. And so if there are some demand pickups here in the next few months, it's going to have to come to the U.S., even with the stronger dollar.
How about the wheat side? We got that winter wheat seedings canola report. I know there was a few changes there. I believe the all wheat number went up a little bit. Any big notes for you on the wheat side of the ledger?
Yeah, a little surprised that the wheat acres come in at, they're coming over 34 million bushels, 34.115 million acres. Trade was looking for about 33.366. So, you're talking almost 800 million or 800,000 more acres. I think it's just, I think the folks down south in the southern wheat plains, they plant wheat no matter what. And the drier conditions got a few extra acres in. They were dry early on, but they caught some moisture. So that was a little bit of surprise. As far as the ending stocks and everything, they left all that pretty much unchanged. Just some real minor, million bushels here or there. Some slight minor changes is all. So
there were some changes on the global balance sheets too. Notably, there was no change to South America's production on this report. Brazil and Argentina, they left that alone, but I noticed Chinese corn production was raised to a record almost 295 million tons. There was a lot of other pieces of data thrown out there on the global picture as well. Anything that stood out to you globally here in the grand scheme of things, Corey?
Yeah, just the corn keeps coming down, and that's been the big story. We're down to 293.3 million metric ton carryout. Like I mentioned, the lowest we've seen that number since 2014. Corn imports for Chinese corn imports. I should back up here. The USDA did lower that down to projected at 13 million metric ton versus last month at 14 million metric ton. There are some. I think there was an analyst out of China, one of the companies out there. Say that could be lowered down as much as 9. So I just these higher prices, China really doesn't need our grain right now. So that was a big change. And then if there's a takeaway on the soybeans, we finally got this carry out of the global ending stocks on soybeans down under 132 million metric ton. We're trading about 128.4, and that's the tendency what we see. We have tendency to see some high numbers followed up by what's the trend over the next few months. And so I'll be curious to see is. We've built up this big South American number to be huge. Okay. Now, I think we learned from the U.S. This year, corn number being having phenomenal growing conditions in the heart of the Corn Belt, Iowa, Illinois. I don't know how much better you could get in those states. And we still had the USDA lower the corn yield by 3.8 bushel. Could we be looking at the similar on the soybeans in that we built up this huge crop in South America and Brazil and Argentina, and that maybe we've built it up too much and that they can still have a record crop, but it might be a couple million metric ton off of what we're projecting right now.
Corey, any other surprising notes or any other numbers that you wanted to mention that you saw with, again, so much data thrown at us in one day?
Yeah, they just overall just production being down. They did tweak some of the harvested acres, a couple hundred, like about 258,000 less, more corn and less soybean acres. So that was kind of a surprise there. I thought, but no, other than that, the yields again is still at a record, but well down. So I think that's something going forward into this spring. How much faith will we have in USDA? I mean, I still, they are the numbers that we got to trade on. I still have a lot of respect for the USDA in here. But we had last year a yield of 183 to almost 184 bushel an acre on corn. Now when the dust settles, we're down sub 180. So, and we had some phenomenal growing conditions. So will the market really truly believe in that next year when we start out the year in the spring of the year? Probably I think it's in May when we get that first yield and trendline yield will probably be 181, 182. So
Corey, real quick too, price perspective here. Obviously, folks, corn and bean producers got a pretty good rally Friday. Some good levels to maybe take a look at for some marketing. Any risk management notes for folks here post report?
Yeah, I mean, that's going to keep the corn market supported. 1.54 billion carryout. It's going to keep it supported. You could see some pullbacks, 15, 20 cents, maybe 25 cents. That's still healthy for the market. So I think corn's going to be supported if you get have some targets in place. We had a lot of targets in place in this report up around that 470 mark. We got hit. Okay. Feel great about that. Soybeans. Okay. Yeah. I think it says that this report is breaks below $10 are probably going to be supported here in the near term. However, we are still dealing with a glut supply of soybeans in the world. So rallies will still be a little bit limited there. So I still like buying these puts on both corn and beans, with the yields and stuff. This gives our guys a lot of profitability. And in these upcoming years, profitability is going to be the name of the game. It's farm for profit, not price, is what we like to go by. So.
Absolutely. Well, that's the name of your guys' conference coming up in Nashville too. And folks can find more details about that. It's the first weekend in February. And I know you'll have more coverage and analysis of the WASDE report, the grain stocks, and more, all online, agmarket.net. Corey Bratlin, thanks for joining us here for a report day recap. We appreciate it. And we will talk to you again soon.
You bet. Thanks, Jesse. Have a good weekend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.